Today, we will look at how to use VWAP indicator for scalping with our GPX gameplay bug scalping methods. In the first part, we will talk about Economy 101. We will fully understand the supply, demand, equilibrium, and the fair price. In the next session, VWAP indicator settings, how it is used as trend guidance for scalpers. In the final section, we will learn two trading techniques by combining GPX and VWAP for scalping and day trading. We have so much to do. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. If you love scalping and day trading and looking for supply and demand strategies with VWAP indicator scalping, check out my free course. You can find the links on Google Drive or directly from my website, which is in the description. And please try to watch the videos in order, otherwise it can be really confusing. Before jumping into the VWAP indicator, we have to first understand the nature of supply and demand. Never use something that you do not understand. Warning, the first part of this video will be the boring stuff of understanding fair prices. You may want to skip the first part, Economy 101, and directly jump to the VWAP indicator. But I strongly suggest you watch it to understand the fair price. Let's go back to the very basics, Economy 101. If you take economy lessons, you'll remember the supply, demand, and equilibrium. Very, very important to understand. As you know, every product in our life has the nature of supply and demand. Everybody needs something, such as pizza. I love pizza. I demand pizza. If I demand pizza, then somebody should sell it to me. Who has it? So anyone holding it will be the supplier of the pizza. So how about the price of the pizza? There should be some balance. If the supplier sells it with a very expensive price, there will be no one to demand it. If it is too cheap, everybody will demand it. However, suppliers will not want to sell it too cheap. So the balance point is equilibrium, which means it is the fair price. Stocks, cryptos, gold, everything has a fair price. So VWAP is actually a fair price guidance indicator. You may ask, why is the price not stable all the time? Why is it keep changing? It is so easy. If there is a shortage of ingredients for pizza, prices will go higher. If there is a natural disaster, prices will go higher. And you may ask why the price goes lower. It is the same thing. If there is a technological advancement, a machine which makes me cut the production time and costs in half, the price of pizza will go down. So this is why the price of anything, stocks, crypto, pizza, French fries, and mobile phones will always change. Fair prices will always be updated due to environmental conditions. Now let's talk about high and expensive prices a bit. Assume one morning the price of pizza suddenly became $100, jumping from $10. It is amazing news for suppliers. Selling medium pizza for $100 is crazy. However, pizza lovers, basically the demand, will not like this. Would I buy a pizza for $100? No, not really. So eventually, the price of pizza will be reduced slowly from $100 to $10. This will not happen at once. It will happen gradually and slowly. What about cheap prices? Imagine buying a pizza for only $1. There will be crazy demand for it. However, it will not last. Trying to sell pizza for $1, really? The production cost is $5 and the selling price is $1. Every pizza restaurant will go bankrupt in time. So as a result, prices will go up slowly and gradually. from $1 to its fair price of $10. Yes, it will happen slowly, without disturbing the whole market. By the way, the fair price here is $10. Will the fair price stay as $10 forever? No, not likely. It will eventually be updated in time. For example, inflation and wage raises. If the wage and salary that you get increases each year, it is normal to buy the pizza for $15 next year instead of $10. A fair raise for a fair price. Finally, VWAP. Did you skip the Economy 101? I bet most of you did. However, I still strongly suggest you watch it. So, what VWAP does for us is simply guide us through supply and demand. It is not a buy and sell indicator. It is simple, fair price guidance indicator. While the price moves between supply and demand, scalpers ride the waves under or over VWAP, taking small entries and exits quickly as much as possible. There are many VWAP indicators out there. Normally, it should be the same, because it has a single volume formula. However, I saw differences between the indicators. I suggest the one from TradingView itself. For the settings, I disable everything possible. I only use the main line. I do not use the bands and deviations. Some people do, but I cannot find a use for them. One warning: there are multiple types of VWAP designed for day trading, swing trading like weekly VWAP, and investing like monthly and yearly VWAP. This VWAP is specially designed for day trading. It should be used under 15 minutes, especially for scalping. It is basically useless with high time frames. You already know what the GPX is from the previous video. This video is actually the second part of the gameplay box scalping. If you did not watch the previous video, please do. Otherwise, nothing will make sense. Okay, this is the pound-dollar pair in 30 minutes. First of all, let's check the GPX zones to trade. Here you can see the powerful break upwards, and later on, considerable swing failure pattern. And another downward break, very strong and powerful. Our first break created a mini order block and imbalance. Our second break created a strong supply at the top and multiple powerful imbalances. The first GPX area was bullish here, from demand to supply. However, if you look closely, the last move creates another giant imbalance and demand area at the bottom. This would be a bearish GPX area. As I said many times before, price is like a tennis ball, bouncing between supply and demand areas. It keeps updating its fair price to new price levels. Go and open any chart. You'll see it yourself. Now, I'll teach you two types of entry techniques with VWAP. The first one is easy. We already made an introduction to it last week. Again, please watch that video to understand this one. Once you identify the GPX area, we are riding under VWAP as our trend guidance. We keep shorting after each break and pullback. I will not go over how exactly to short it because you learned it already. Order blocks, breaker blocks, mitigation blocks, imbalances, premium and discount zones, optimal trade entries. You know every type of entry style. You should be a monster already. We have already identified our GPX area, as you can see. Let's check the 3 minutes time frame with the pound-dollar pair. Once you activate VWAP, you can see a little consolidation period. Later on, the price started its smooth journey from the high time frame supply area to demand area. Do I need to draw anything here? You can see number of breaks without me drawing them. There are around 9-10 breaks here. Did all of them work? No, not really. I counted around 6-7 breaks that really worked. Some of them never pulled back. This is scalping. If you are into scalping, you have to have an extremely powerful mentality. You are looking for like 50-60% win rates on an overall day. But GPX and VWAP are great guidance for scalpers. You'll have trading boundaries, clear entries, and targets. Talk about the other types of entries. Now this method is mostly used by my friends in real life. Do I use it a lot? Not likely, but it works well if you backtest it. Once the price comes closer, high time frame demand area or supply area, you'll notice the price will try to push itself upwards more and more. VWAP is actually a kind of magnet, a fair price magnet. It will pull the price from anywhere if it extends too far away from the VWAP itself. Basically saying, VWAP will act as target. Divergences in these areas are tradable. Once the price extends far away from VWAP, but remember, it should be very close to high time frame demand. We need a reason for the price to go up. If you closely look at this chart, price slows down when it comes closer to the high time frame demand area, finding more and more reasons to go higher. When the price overextended away from VWAP, it started to pull the price to itself. VWAP acts here as a price target. So after the breaks from mini discount zones, it is possible to trade divergences like RSI, Mete histogram, or OBV on balance volume divergences. And maybe combine the divergences with swing failure patterns. Now, do I suggest this method? Well, it is not pure price action, but it is highly related to price action. It is very well usable actually, it all depends on you. Okay folks, with this video we are completing our GPX and VWAP indicator scalping. These are very important supply and demand strategies used for day trading and scalping. I believe that it will be really useful in your trading life. I hope you subscribe to the channel and like the video. Thank you, please take care and see you soon.